David Morgan is an expert on silver, gold, and precious metals investments. He's a world-renowned lecturer appearing on CNBC and the Fox Business Channel. He's an author, having penned Get the Skinny on Silver Investing. And Mr. Morgan is a regular contributor and friend of the Ellis Martin Report. David, welcome back to the program.
Thank you, Ellis. Good to be with you.
You just recently posted a video on your Silver Guru YouTube channel. It's called The Fast Effects of Massive Hyperinflation, which make a strong point about the deterioration of the Zimbabwe dollar, with a look now toward the U.S. dollar and its devaluation. The Zimbabwe dollar's drop was quite swift. Are we seeing possibly something like that with our dollar now, or has a slow collapse been happening for quite some time now?
I think on the U.S. dollar it's been, in quotation marks, a slow collapse. I mean, if you look at the Federal Reserve's own numbers, they'll tell you that the U.S. dollar, from the time the Fed was founded in 1913 to present day, it's worth a nickel or 4 cents. So you've lost like 95% of the value. Well, if you lost 95% of the value in a day, that would certainly be a hyperinflation. But over almost 100 years, it's slow enough for most people to adjust, although there's been problems that have really accelerated from the time that the gold window was closed in 1971. As an example, just 9 years later, late 79, early 80, we were looking at, the official inflation rate around 13%. Paul Volcker was head of the Federal Reserve at the time and put interest rates up near the 20% level to, calm the inflation situation, which was really getting out of control. So we're now at a point, we're arguing about, how is this last 4 cents worth of the original dollar going to be, how's it going to deteriorate, quickly, slowly, or what? And the answer is no one knows. But the point of that film was a couple things. One that you mentioned, Ellis, that we went from Zimbabwe dollar equal a U.S. dollar in 2007 to the printing press money, and it took about a year and a half to go to where the $100 trillion note never got issued into circulation, because by the time it was printed by the German company that made it, it wasn't worth the paper and ink it took to print it.
I believe, David, that they've converted to the use of actual gold and silver as currency in Zimbabwe now. You were recently present for the signing of legislation in Utah legalizing the use of gold and silver coins, albeit U.S. minted coins as currency in that state.
Well, I just got back from Utah, as you know, and they've enacted this gold and silver legislation. And this is the way monetary reform has happened throughout history. Most people that, first of all, they don't read history at all, but those that think that they know what happened usually say, well, the government came in and, went from a fiat system back to a gold standard. And in a sense, that's true, but the way it happens is usually grassroots from the bottom up, and the people go back trading real money amongst each other, and then the government reacts to that. And that's what you're seeing now, I think, with this Utah legislation that's now legal on a voluntary basis to trade in gold and silver throughout the state. There are other states that have similar legislations that have not been enacted at this point in time, but I think some will follow, and others will as well. So at the state level, in the several states here, you're going to see gold and silver used as means of payment on a, again, voluntary level, and I think it's going to, catch on more and more. It only makes sense in a system where you're unsure of what the currency value is going to be day to day, minute to minute, and that's not the case for the U.S. dollar yet, but we're getting there. And even if it doesn't go the Zimbabwe route, which I doubt it will, I don't think you're going to see that kind of inflation in the United States. You don't need to see that kind of inflation to see amount of people that want final settlement and real money, and that's what this is all about. So I think it's a good thing for Utah, and I think you're going to see more of it.
With this happening in Utah and other states lined up for the same, and then China and Russia divesting their holdings in the dollar and U.S. bonds, what's coming, David?
Well, it's coming, unfortunately, is the great day of reckoning. And the great day of reckoning is that at some point the dollar collapse happens. And in some senses it's happening. In other words, it isn't usually an overnight anomaly where all the banks close. That's not probably what's going to take place. I'm very doubtful that that's the scenario. What happens is, as we are witnessing, more and more nation states start to say, I don't want any more dollars. The Fed becomes the buyer of last resort of the bond market, which is true as of still going on until June 30th, when QE2 is purportedly stopping. And right now the Fed's buying over 80% of the bond offerings. 80%. Well, if it stops on the 30th of June, who's going to step in and buy it? China? Russia? Japan? I don't know. I doubt any of them will buy that much. They may buy some. So we get to the end game, and the end game is I don't want the dollar anymore. Well, the problem with it is so interconnected for the global economy because the dollar is still a reserve currency. So if you stop wanting the dollar, then what do you want? And it doesn't take much out of the bond market to go to the security of gold to move the gold price in paper terms to an astronomically high level. And that's the situation we're facing. I mean, China's increased its gold holdings. Russia's increased its gold holdings. India's increased its gold holdings. Central bankers have become net buyers of gold recently as they were net sellers for a very long time. So we're getting near the end. And hopefully it gets to a point where an adjustment can be made. In other words, when the dollar gets to some level, then we go back on some type of a gold standard or pseudo gold standard or commodity basket or something that makes sense and has some, faith to it. But we're not there yet, but we're getting there very rapidly.
Fed Chairman Ben Bernanke said recently that he's clueless with regard to the how or why of the soft patch we're going through right now. And those are his words. Can we expect to see commodities rise during the summer with a lack of confidence, not only in the Fed, but by the Fed, in the Fed?
It may happen. I've been kind of in the other camp, but I'm very, open-minded, and I'm very much a believer that markets know more than anybody. I'm not changing my mind entirely based on one day's event, but certainly it could happen. Basically, Bernanke is one of the best Keynesians out there, and their whole belief system is about monetary stimulus. The whole idea is that you can stimulate the economy by having a loose monetary policy, in other words, cheap money available, and that creates liquidity, in other words, lots of cash, and people come in and get that cash and buy things. Not only do they buy things, but some of those people will start businesses or expand their businesses or buy inventory. So loose monetary policy is the Keynesian way to get out of a jam. And they've had loose monetary policy and interest rates so low that they're almost giving money away, and no one's taking it. It's sitting in the banks, and bankers are earning interest on it, but there's very few people coming in to get the money. And it's one of those pushing on a string scenarios that have been talked about for decades, and I'll explain that. The idea is that everyone that really wants to borrow more money, which are people that are not creditworthy, people that are upside down on their house, they can't get the money. The people that are creditworthy, that might have a lot of cash in their business, doing very well in a certain endeavor, they don't need the money, and so they're not going to be borrowing it. So there's all this money available, but no one has any demand for it. So it's not a function, as the Keynesians believe, of creating more money availability. That's been done through the QE1 and the first bailout and the QE2. It's sitting there, but no one's demanding the money. What takes place is that the money starts to get shunned, not necessarily in the U.S., but we have a global economy. So as these other nation states say, I don't trust you guys. All you're doing is printing money. It's becoming worth less and worth less and worth less, and it's going to be worthless. I'm getting out of the dollar. As that happens, you're going to see interest rates start up, and the dollar will continue down as it's been doing for so long. So it's a sad story in a way, but also on the upside of that, this has happened again and again and again throughout history, and people get through it. It's not like the end of the world or a big Armageddon scenario, and it usually happens in a manner, as I said earlier, that there's a correction that can be made through either government or fiscal policy. The problem is these Keynesians are going to continue to try things that don't work until they finally get to something that does work.
Well, this government is not competent enough to fix anything. That's what you're saying.
Not the present state. Basically, what you need is a huge change in not only monetary policy, but fiscal policy as well. You're going to have to change a lot of government. Basically, the government's gotten so large, and that's sucking out so much of the resources that there's not much left for the private sector. And once that happens, not everyone can work for the government. You go down the road that we're currently on and keep expanding a non-productive part of the society, the people that are producing get to the point where they can't, produce enough to support everybody. And that's basically where we're at.
And many of the people that aren't producing are incapable of producing because of a deficiency in skills or education.
Yeah, there's a lot of things that need to be corrected, and certainly It would take time, and it will, and I think it will. I think markets will come back, but I think it's going to take a lot of time. It's not one of those bad recessions that took, 2 or 3 years to get through, and we come up the other side, and, happy days are here again. I don't see that this time. This is a structural problem that's been building for over 30 years, and it's multifaceted. It's very complicated, and there's no one that I can see other than very few that will even tell the truth to the American people. Ron Paul stands out as one that will, and let people know what's really going on with monetary policy and what it's going to lead to. But most of the other politicians are just mealy-mouthing that it's not that bad, we can get through this, and, let's all sing, happy days are here again, and we'll cut back $100 billion. I mean, that's like a spitting in the ocean. It's meaningless at this point. We're talking trillions of dollars of deficits now.
What's David Morgan doing to protect his assets at the moment?
Well, number one is live within your means. This is a harsh lesson for a lot of people that have mortgages that are upside down, and I feel badly for a lot of them. I mean, a lot of problems come to the fore under these kind of economic conditions. After that, I think to look closely at, what your budget is and try to have some cash available, although I'm not real big on fiat currencies. Let's face it, cash is cash. It's the most liquid way to, pay for anything. And then after that, I think you should have real money cash, and that would be gold and silver coins. If you go beyond that, then certainly you can move up to the risk-reward profile, and you could probably move into, ETFs or mining shares or whatever. But for most people today that I run into, across the country, basic. It's, live within your means, save whatever you can, get some gold and silver coin, and leave it at that, because a lot of people don't have the incomes they once did, or both people working like they once did, or, equity in their home like they once did. I mean, the situation has changed drastically since the last few years, and it's really not getting better from what I can see, certainly not in the town I live in. And I travel quite a bit, Ellis, as you well know, and any place I go, talk to the cab drivers, I look around the town, I talk to the business people, and I try to get a feel for, are things better than they were last year, same as they were last year, worse than they were last year? What's it like out here? And every case I can recall, the same as or slightly worse or much worse than they were, let's say, the last year or two.
Tell us about your website, silver-investor.com.
Well, it's a twofold website. There's a lot of free information there on audios that I've done, videos that I've done, interviews, a lot of written work, most of that up on the website for at least a decade. A blog up there. We put other people on the blog that have very important things to say in the market. So you can look at the Twitter feed, you can look at the blog, you can look at the videos. All that stuff is for free. You can go in the archives, read all the articles I've written in the past. So that's half of the website. And also you can join the free email list that I have. And on the other side, it's for, serious investors that get my best thinking, and it's not just me. There's several contributors to the Morgan Report. And we feature money, metals, and mining. And we show you ways that we believe can make you profitable in the sector, and we spend a lot of time looking at that. I usually talk about the global economy or monetary situation. This month coming up, July, I'll be talking about this Utah bill. I actually interviewed the man that wrote the bill that was passed into law, so that's quite a good interview from my perspective. Some people will be interested, some won't. I'll also be talking about the effects of QE2, what it really means for the gold market, the currency markets, and the bond market. And, of course, questions from our subscribers. And lastly, I'll be reviewing probably the 10 speculations. I'll probably be looking at least 8 of them and giving an update on those.
Your subscription rates are multi-tiered, as I understand it.
Right. The more you pay, the closer you get to me. Basic service is kind of a buy and hold strategy with some updates. That's suitable for almost everybody. Then above that, there's a basic plus service, and that's a look over my shoulder service. Well, if I look at all the markets, but particularly the metals, if I see a good trade or an opportunity, I'll voice it, and it's done by video. And I post the video on the members section of the website. And the last one is the top tier. It's a consultation one-on-many. We do those once a month. Sometimes we feature companies. Sometimes we feature, I had my futures broker on recently, explain what's really going on in the COMEX. There was a lot of misinformation as silver was rising from 40 to 50, and so we went through like a lot of the stuff that was out on the web that was really inaccurate. Pinned that down, gotten interviews with prominent people like Eric Sprott was on there 1 month. I had Nick Barishev from Bullion Management Group on there 1 month, talking about the ETFs and how they really operate. So it's a top-level service, but it's for people at the extreme end that are really, really into this market in one way or another.
David, thanks again for joining me today on the program. It's always a pleasure to speak with you.
Excellent. Thank you.
The website is silver-investor.com. That's silver-investor.com. I've been speaking with the Silver Guru, David Morgan, and this is the Ellis Market